Let me put it this way, the largest investor into 2 software companies this week, and those are the riskier investments. So in stage 4, crypto was something that I did. These days I'm not as into, but if you want to, at stage 4, you can start to do that. You can also begin to pick your individual stocks. This is something that I personally have never done, but I have many friends that it's worked out for. You know, they have the time to sit and look into companies and decide which one's the right one, which one's not. Listen, I own many companies. I don't have the time to look at the financials and look at the reports because I would much rather do that for my own companies. But as I said, in stage 4, you can begin to really do this. But if you are going to pick your individual stocks, as I said, you need to do your fundamental research into companies. You need to look at their balance sheets and you need to look at their income statements. You need to really dig into the fundamentals of the companies and pick a few that you like. Now, of course, you're going to keep doing everything you've been doing in the previous stages, but you can also experiment with crypto and other more volatile asset classes. Now listen, the richest people on earth, they don't make their money off their salaries. They actually get it in stock. If you look at Sundar, who's the leadership at Alphabet, his salary is $2 million a year, yet his total compensation is $226 million. Or Netflix co-CEO Reed Hastings. He has a very interesting book, by the way. He's on a $650K salary, but his total compensation was $40 million. So the reason I said that is just there's levels to the game, and understand that equity in businesses and ownership in businesses, even if it's a tiny amount, can mean a lot later down the line. Now, stage 5, as I said, there's actually a stage 6, but I'm not going to talk about that here. Stage 5 is all about risk management. And this is already once you've made your millions. Here, you begin to diversify your portfolio beyond stocks and shares, and you can look to real estate and bonds. So kind of as I already talked about in stage 4, in stage 5, you can start buying some property, you can start buying some assets, once again, as I said, even like hotels. But I would say that that's more sort of stage 6, where it's like, now you really have some proper real fun money to play around with. But I'll tell you one interesting thing, even bonds, I had zero interest. I didn't even look at bonds until I had at least an 8-figure investment portfolio. And even at that point, it was still a couple years until I invested in bonds. It was only once bonds were yielding 5, 6, sometimes even 6.5%, depending on their rating. But I can tell you that in October, November 2023, I bought a crazy amount of bonds. And if you told the version of me that was in stage 4 investing, oh, you'll be investing into bonds, my opinion was always like, oh, that's so boring. Why would I do that? And that's because in stage 5, a lot of it is risk management, making sure that you preserve your wealth, making sure that you have some riskier plays, but you also have some defensive plays. And to me, bonds are always a defensive play. It's always like, okay, let's make sure what we have here is safe.